really quickly, and then I'm absolutely going to answer your question here. One of the things that I like to look at is, how do I get you to keep your money before you hand it over to somebody else? Okay. So for example, private foundation, you can use that money.
Yo, this is Christian D. Evans with Journey with Christian D. Evans podcast. Guys, thank you so much for tuning in and listening to our amazing podcast. This is where we reveal the top 1% of business concepts and systems and processes to scale 8 and 9-figure businesses. We interview top-level 8 and 9-figure CEOs, business owners, and amazing TEDx speakers like David Meltzer. We got Nick Cavuto, Pascal Bachman, and so many others. And if you feel like this resonates with you, please share this with your friend, your family, and make sure you impact them as well, because we're trying to spread the message on those that do not know how to scale 8, 9-figure businesses and talking higher level business concepts. So guys, remember, enjoy the episode and be uncommon if you can. Cheers. Thank you so much for tuning in to Journey with Christian D. Evans podcast. I'm your host, as always, Christian D. Evans. Now, why be the top 10% when you can be in the top 1%? Today, we have this amazing guest where we are so excited. She is the top 1% of tax strategists in the USA, specializing in business tax, strategy, real estate, CPA, MTax, CTC, CTS. If you have no idea what that meant, well, then that's the reason why you need to listen to this podcast. We are so very excited about having her on, because we've had a lot of individuals on that have been in the CPA world or a CPA world or tax strategy, but we're going to be talking about, and this is going to be a lot of fun, we're going to be talking about her case studies. Now, we're not going to share the names or whatever, but we're going to tell them about the foundation, the situation, and then also certain things that she was able to do, her and her team, to be able to unpack that and really save massive amounts of money, of wealth, of building the right foundation. And we're so excited about having her on. Please welcome the woman that's known as the Tax Goddess. She's the CEO and founder of Tax Goddess Business Services, my friend, Shauna. How you doing today, Shauna?
Good morning. How are you?
I am doing fantastic. Thank you so much for joining us, Shauna. I want to ask, before we dive into all these fun case studies that we're going to be sharing here, and just kind of unpacking so much, and we're going to be going a mile a minute, which is very exciting. Shauna, I want to ask about your evolution of your journey. I truly believe that there are certain things that there are pivotal moments that helped you maybe eliminate limiting beliefs, that helped you become the person you are now, the successes that you have. And if you could just imagine that young Shauna that was naive, that had no idea, that was hitting your head across the wall, what were those pivotal moments that helped you become the woman that you are now as the top 1% tax strategist?
So one of them is really, really easy. If you're seeing the video version of this, I am a redhead, right? And good or bad about being a redhead, that also means that I'm a Taurus of all things, which means I'm very bullish. I get exactly what I want when I want it. Let's go get it. Okay. And the very long story short, I actually started off in astrophysics, not in tax. I started off in a completely different world. I was going to go work for JPL Labs. That's all I ever wanted to do. Very long story short, one day I'm at home having breakfast with my mom, who is my goddess of all things. Okay. She pushed back from the table. She stood up really sharply. And normally she's a very composed, stoic kind of woman. IRS notice in hand, right? Yeah. When you see your mom freak out about something like that, especially when she's normally so composed and together, it really, when you talk about a pivotal moment, that was it. My brain, when she explained the situation and what's going on, I was looking at it going, well, wait a second, you've hired all these super smart CPAs and financial planners and all this stuff to be able to lower your tax bills. So why are you now paying this tax bill? Like, I don't understand. And of course, they can't help her, I will. So very long story short, completely switched, went to tax and accounting and finance, fell in love with the tax world, which no one ever says except for us tax nerds, but fell in love with it. And very long story short, was able to get her tax rate down from about 53% to about 6.92 on average permanently, which makes me very happy. So, and her very happy, which makes me even happier. So.
That's awesome. And so I'm curious with that massive movement, right? Because it's so interesting. You were going down this way and then all of a sudden you switched and it became your passion.
Yes.
I'm curious, throughout this, did you have to were you naturally good in math and that kind of stuff, or was that more of a learning experience? Because, like you mentioned, you have this love, but I think it's the love of the result, the happy client, be able
Correct.
to really. It's almost like a problem that you can solve much more than the intricacies.
Yes. Well, the benefits of starting in astrophysics, right, is math came very easy to me. Numbers is very easy for me. It's just the way the brain was born, I suppose. But yeah, you're right. I mean, I suppose brings up a very good point. As I was going, when I switched to accounting and finance and then later found tax, it wasn't until I actually found tax as compared to accounting and finance. Because for me, accounting and finance was very much straight numbers, effectively recording history. It wasn't really interesting at all. I mean, I was really good at it because numbers are easy for me, but it wasn't very interesting. And it wasn't until I found the tax side of it and really started focusing on the tax side. Tax is a giant game of chess. You have specific rules. You can only go this way or that way. And each of the pieces, each lever that you toggle does a different thing, right? And so trying to figure out what your ending goal is and trying to reach that ending goal, you have to be able to put all these pieces together. So you're exactly right. Solving the puzzle to be able to get the outcome makes my day. I mean, that just makes me super happy. So yeah.
Well, let me ask you this also, because throughout this evolution, and I always find tax so interesting because one, it's almost sometimes a political game a little bit as well.
Oh yeah.
And there are certain things that you cannot control, and it's always just constantly evolving. And I'm curious, you as a CPA that's in this all the time, what do you guys do to make sure you stay on top of it? Because I know you can't just have education just as the baseline. You have to be in the code all the time, because it is very contextual, becoming the best that you can be to help these very wealthy individuals.
Absolutely. You named the game. Education, 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 talking to people, talking to other people, talking to more other people, right? I'd say, our baseline, let's put it this way. The IRS, I subscribe to IRS newsletters, all 50 state newsletters, the territory newsletters, they come out, right. Welcome to my world. So yeah, I read through at least 6 or 7 newsletters a day from the various locations and what's going on about what's going on. Now, a big piece of it, so every day, typically, just the IRS, for example, sends out 3 updates a day, just on what's changing at the federal level. So one of the things that we really look for, and I've got a team, don't get me wrong, right? It's not just me by myself in a closet doing nothing but reading 24/7, right? Who needs sleep? But anyway, different story. So I do have a team, right? And really, it does help that we focus. We're a very kind of niche kind of business from that standpoint, right? So my specialty is tax strategy, and I specialize on people making good money, successful entrepreneurs, business owners, this kind of thing, right? So I'm not reading about the nonprofit world. I'm not reading about oil and gas specifically, right? Like I'm not preparing those partnership returns. I'm very focused on the big picture strategies. So there's a ton of little things that change every day, right? Instead of an and, it now says or. Instead of 1,000, it says 1,200. There's lots of these little changes, right? But generally, when we're looking at strategies, I'm looking for the biggest bang for the buck, right? What kind of court cases have come out? What kind of regulations, changes to the rule? Maybe that and versus or now makes a massive difference in my real estate investor team, group, right? So really looking for strategies that are going to give the big changes, the big dollar amounts, because to be honest with you, yes, there's millions of strategies out there, but there's about 400 of them that really move the needle. And I'm talking, $50,000, $100,000, $1 million in savings every single year. So I'm looking for big ones. I don't think I'd ever sleep if I read all of them. So.
Well, what I find so interesting about this world is I've had a CPA an accountant and all this other individuals. And what was interesting is I had a fire because I started realizing that I was going and talking to some of my other wealthy friends, and I would come and I would say, hey, why don't we implement this strategy? Why don't we implement this? And I started realizing, wait a minute, I'm the one that's not expert at this. And I had to bring up these ideas, and you're saying some stuff. So obviously I want to just start with, first of all, for those that are listening, there is a massive difference between just a regular CPA and those that would be custom just for those that want to, produce generational and preserve wealth. So if you could just share with us when we're looking at, and obviously, Shauna, they should reach out to you naturally. But for those that obviously may be looking at this where you've got a lot of clients already, you're kind of already maxed out, which is never impossible because like you said, you're never sleeping anyways. But for those that want to, just help us differentiate that and allow us to say, okay, this is a good CPA for me, this is a bad CPA, and not to put down those other CPAs, but just allowing them to build a context around that.
Absolutely. Yeah, there's two pieces to it. I'm going to start with one of my favorite examples. Okay, I know today is going to be an example day. So my favorite example, when you go to your CPA and you say, because most people do, small businesses, big businesses, nobody wants to pay more than you have to. Like, why would you just hand the government money, right? That's very un-American, right? Keep your money. So generally, any business owner is going to go to their CPA, to their tax preparer, whoever it is that you're working with, and they're going to say, hey, I don't like how much I'm paying. I want to pay less. What kind of strategies can we do? Okay. The two most common that we hear, okay, the first one is buy a car, and the second one is fund as much as you can into retirement. Okay. Both of those strategies can be very good strategies, right? I have no problem with a CPA saying that. Okay. In my world, that's a level 0 strategy. And let me explain what that means. There's an aggression scale in the world of tax, okay? 0, meaning the IRS never calls you never ever. There might be random audit, but basically never ever, right? Okay. 10, meaning we're all going to jail. Okay. Yeah, you have to know where you sit on that scale. Because as an individual, right, you're going to get some people that I never, ever want to talk to the IRS, never, ever. I want to be a 0. And that's your choice, right? Also an American thing. You get your choice as to what you want to do and how much you want to pay, okay? So if you're a 0, that's fine. The CPA that says buy a car and fund your retirement is probably going to be just fine for you, okay? Because you're not asking for a level 2 or a 5 or a 7 or a 9.5, in which case we have to drag you back because we're not going to jail either. Okay. So you have to know where you sit. Now, normally, I always have to say this, normally, okay, because everybody can pick a different choice. Generally a W-2 person, right? So you have your W-2, you have your mortgage, you're not really doing a lot of business. Maybe you have 1 or 2 rental properties. Okay. Maybe you're sitting typically between a 3, most normally under a level 5. Okay. So if your CPA is a 0 and you're a 5, that's a question you need to know. So I would ask any CPA that you're working with on scale 0 to 10, right? 0, never hear from the IRS, never ever. 10 mean we're all going to jail. And I promise you, well, maybe your CPA will laugh. Some of them are very serious about that kind of thing. But hopefully they laugh and they have a little bit of sense of humor. But what you want is their answer, okay? Because if you're a 5 and their answer is, oh, well, I'm a 0, it might be time to find a new CPA, right? Not because they did anything wrong, not because they don't know strategies, whatever, just because you don't match, right? You're not matching. So then you get the other end for most entrepreneurs. It always cracks me up because when I ask this question to entrepreneurs and business owners and, kind of bigger investors, generally the answer is, oh, well, 30, you're going to keep me out of jail, right? I'm like, listen, honey, red and orange do not go well together, right? I'm not going to jail for you. It's not happening. All right. So, generally tax status will go to an 8, right? Which means, listen, everything is legal. Everything's above board because I am a CPA, right? I have to sign my name. I can lose my license, my entire ability to do everything that I love to do. So I will go to an 8. Okay. I will pull you back. If you're a 30, I'm going to pull you back to an 8. I might let you go to an 8.2, maybe, depends on who you are. Okay. But that's fine. And I'm an 8 and you're an 8 and everybody's happy. So at an 8, right, we're doing everything legal, everything above board, but you understand that the IRS might call you, but you have all the backup. this is why I'm doing what I'm doing, and here's the paperwork, and here's my T's and my I's, and everything's crossed and dotted and everything else, right? So for me, that's one of the most important questions that you can ask is, well, where does my team, if I'm at a 5 or an 8 or a 2 or wherever, where does my team sit? Okay. If that doesn't match either way, if your CPA is a 5 and you're a 2, you might want to find a new CPA too. You might want to be with a 2, because how do you know what positions the 5 CPA is taking on your return? Okay. Now, if you're an 8 and your CPA says, yep, the only strategies we can do is buy a car and fund retirement, you definitely need to find maybe not a new CPA, and I'll come to this because this is part 2, but definitely a strategist. And I think that really goes to the core of kind of what you were talking about, which is people have had CPAs for 10 years, 20 years, 30 years. They worked with them forever. They trust them. They appreciate their opinion, these kinds of things. But a CPA is not a trained strategist. You were talking about the letter soup after my name, right? I am a CPA, but I also have a master's in tax. There's only 60,000 in the entire country, people that have a master's in tax. There's 660,000 CPAs. Well, if you keep going through that alphabet soup, CTC, there's only 607. CTS, there's only 15. 1.5 out of 660,000 CPAs in the entire US that do what I do. So the likelihood that your day-to-day CPA is also a tax strategist, no, right? So we need good CPAs, because a CPA prepares your tax returns. They take the numbers, they put them on the forms, they ship it to the government. If there's a problem, they help you, right? That's their job. A tax strategist's job is to look at absolutely everything you do before the end of the year, before everything is finalized, make the tweaks, make the changes, so that when you hand all those numbers to the CPA, everything is so much smaller. You look poor. That's our job. So yes, I hope that helps.
Well, this is so important, and I really appreciate building that foundation a little bit, because it is very important for a lot of my listeners as well as myself, because nobody goes around and helping you really establish that, right? It's just through trial and error, and you're like, oh, this was a bad situation, and so that next year, et cetera. And like you mentioned, I think some of the most successful individuals that I've talked to really plan out 5-7 years, and they work very closely with people like yourself that are able to strategize that, right? And there has to be a strategy, because it's like, okay, well, we're going to go ahead and deploy a lot of capital in XYZ, because at this time next year we're going to anticipate that we're going to have a huge tax bill. So how do we do it, right? So now this is why I want to talk a little bit about case studies, because I've had people like yourself on, and we've always kind of just talked to like, oh, we got to have, think at the end of the mind and reverse engineer and then implement a system and a plan and stick to the plan. But it's so contextual, right? Because you were just telling me offline, you had a client that came to you that, making 20 million, lives in California. He was like, oh gosh, move to Puerto Rico. It's like, what? Okay. So I'd love for you to just build out the foundation, help us understand. And then also you were able to do some really cool stuff. So tell us a little bit about that story.
Absolutely. Absolutely. So foundation, and we'll use the example. I love it. Okay. So the very first question, other than, hi, good morning, how are you? Okay. The very first question that I always ask everyone is, where do you sit on that aggression scale? Right? Because that, as a planner, we can plan for people that are a 0, 2, 3, 5, whatever, right? But if you tell me an 8, my plans, what my brain is calculating, what I'm doing is very different for a level 0, level 5, level 8. They're just very different. So we get on this telephone call, and this poor guy, he's breaking my heart. Okay. And I'm a total softie. I realize, yes, I'm a redhead and I'm a bull in the China shop, but I'm a total softie. Okay. And so, very long story short, guy calls in and says, listen, a friend of a friend told me about you. And I'm like, okay. Oh, it's a good start, meaning you've got a problem and you need help, right? So let's figure out how to get you help. And he says, listen, my business took off. Last year, I made about 300,000. This year, net, I'm going to make about 20 million, right? Big difference. It's already November 15th, whatever date. Okay. We're almost at the end of the year. I was told that the only thing that I can do, I've called 3 people before I spoke to you. The only thing that I can do is move to Puerto Rico. I have 2 little kids. My wife does not want to live there. I don't want my kids there. I want my kids here in the States. I want, in California, I'm in California. I really don't want to do that. I am hoping that, side note, hope is never a strategy, right? So he's looking for a strategy, right? But I am hoping that you have something that you can help me with, because if you can get me under 10% in taxes, then I will stay, because Puerto Rico's 4. If you can get me under 10, that's my calculation. That's my number. If you can get me under 10. Okay. So going through this conversation with him, because the next piece of this, now I understand the baseline of a situation. He doesn't want to pay tax. Who does? Fine. He doesn't want to move to Puerto Rico. That's his life. I don't want to move the kids. I don't want to move the wife. I don't want to move the thing. So I'm asking a bunch of other questions. What else do we have? Well, the wife loves her job. She really doesn't want to leave it. I'm like, okay, another stab in the heart, right? Like if we have to go to Puerto Rico, the wife who loves her jobs and loves the place and she has to leave. Of course, nobody wants to leave. So we're going through all these details, get to the end of the call. And I'm like, all right, listen, here's the deal. Send me your tax returns. I understand that last year's going to look different than this year. Send me the profit and loss, like send me data. Okay, send me data, because once I can analyze the data, I can come back to you and we can see if there's options. I'm not going to promise you there's options, because until I can see it, right, I've got to analyze the stuff. So sends it, got a week, comes back, analyzes. Now, I'm thrilled, okay, because I know, right, now I've run the analysis and I'm like, right, because now we can do things. So during the telephone call that we had, when he's giving me details, he's telling me that he wants to invest in real estate. Ding, strategy. He's telling me that him and his family are highly charitable, like 30% of their income charitable. Ding, right? And he's giving me all of these little facts in this conversation that now here I am about to deliver, here's our proposal, here's what we can do, okay? So very long story short, on 20 million, his current CPA had calculated he was basically going to pay about $10.4 million in tax, right? If he stays, if he doesn't move to Puerto Rico, a lot of money, right? We're able to get him down by about 8.7 million in about 4 moves, which is really cool. So one of them relates to his wife. I'll use that as an example, okay? His wife, the wife loves the job, right? She doesn't want to quit. Remember, she said, I love my job. I don't want to quit. But she can volunteer. She doesn't have to be a W-2 employee, because if he wants to invest in real estate, right? If she volunteers, she can now become the real estate professional in the relationship. He can go and invest in real estate, and all the cost segregation and depreciation and everything else now offsets big chunks of his $20 million worth of income, right? Everybody's happy. She still gets to keep her job, air quotes, right? She gets to volunteer at her job, but we get a massive tax write-off for that. Beautiful. Okay. Charity, very well known. I'm still, to be honest, kind of pondering whether we're going to go with a private foundation or we're going to go with a crack-clat type setup. I don't know. I haven't figured it out because he's got kids, right? So I'm thinking crack-clat, but we got to figure that one out. But then the whole family can go on trips, all of that paid for via the trust or the private foundation or whatever we're going to do. It meets his charitable needs and big giant tax write-off. Oh, darn, right? We're looking at oil and gas or solar. He hasn't decided which one he thinks is better. So it might be 50-50, I don't know. But that's another, $1 million off the bill. So you really, I think one of the most important things when you're doing these tax strategies, I can throw at anyone, great, here's 400 tax strategies, right? Here's all the things that work for any person. But that's not really what you're looking for. Like you could go to Google and Google tax strategies, right? You could absolutely do that. But how? What you're looking for is the guidance on how do I actually implement that? Because I'll tell you what, very few CPAs would tell the wife to quit her job. Wouldn't even come up, wouldn't even cross their mind, right? But that one little change, and now we have a huge offset to his income from one little change. And I think that's, for me, listening to what my rules are. I come back to that chessboard. My rules are, I don't want to move to Puerto Rico. She doesn't want to quit her job. She's going to quit, but she can still volunteer, right? Like, we can make this work based on the rules that I have from both the client and, of course, the IRS to do it properly and make sure that we're good and everything's above board. So happy. He's happy. And that's what makes me happy. Because now the wife doesn't have to move. She gets to keep doing what she wants. The kids don't have to move. Like everybody's happy. So it's really hard to argue. There we go.
That makes sense. And so let me ask you this in regards to this process. I want to loop around oil, gas, and solar. You mentioned that as one of the strategies and others here. We're going to dive into that. Oil and gas, what do you mean by that? As an alternative investing, or is it more of deploying capital for what? Explain that a little bit further for us.
Absolutely. And so let me come at it from a different direction here really quickly, and then I'm absolutely going to answer your question here. One of the things that I like to look at is, how do I get you to keep your money before you hand it over to somebody else? Okay. So for example, private foundation, you can use that money. For example, an 831B, you can use that money, right? You still have access to capital. Okay. Oil and gas is great. Solar is great. In both cases, there are, like in solar, for example, there's credits that you can obtain. I think right now it's 26%. With oil and gas, it's like a 92% write-off of whatever your investment is. But in both of those cases, these are investments. And this is where, I start to go, well, do we want to do that or not do that? Right? Because I'm not an investment person. Like, throwing my hands up right now, I don't sell insurance. I don't do investments. Like, I'm a tax goddess. That's what I do, right? So from a tax perspective, both of those are amazing, right? But now somebody else has your money. So do you like it? Like, do you like it? Because I'm not telling you it's a great investment. I'm telling you this gives you a great tax write-off, right? So really, for me, a part of what we do is not only giving you tax strategies, but also working with the rest of your team. Because if you've got an investment guy or woman or whoever, and they look at that investment, they're like, oh, right, then great, then let's go do something else, right? We don't have to use that strategy. There's about 6 others that we could use. Let's pick and choose the ones that fit best for each and every specific client.
That makes sense. Okay, I appreciate you explaining that. Now, is that California specific? Because I do know some states, they carry a pretty nice solar kind of like when you invest, et cetera. So I just didn't know, is that you said California? That's not. That's kind of
he just happens to be in California. Yeah, when I speak publicly, I tend to talk about the federal level because you're absolutely correct. Every state has their own. In California, you might get extra credit in California, right? Versus in Texas, you get better for oil. No big surprise. So, it really does depend on where you are, also where you're investing, where the rest of your money is coming from. We end up with a lot of people, it's interesting to me, but we end up with a lot of people that come in that didn't realize that they're actually supposed to be filing tax returns in 10 states or whatever, because they've got a sales guy out in Oklahoma and now they're supposed to file in Oklahoma and no one ever told them. So for me, that kind of goes to that aggression scale. I am absolutely cross the T's, dot the I's. If you're supposed to file, we file. Let's go look at strategies that will help you reduce the taxes on what you have to file. But let's do everything legal, right? Everything above board, because I'm, like I said, red and orange don't go very well together. So I'm not going to. So yeah.
Okay, that makes sense. And I really appreciate that, because I never thought of that strategy. It is an alternative investing. And I didn't know that I knew solar, but I didn't know oil and gas. But if it's there are certain opportunity zones, if you will, where you can obviously write that off. Okay, gotcha. And I know real estate, when you're talking about real estate, you're talking not as a syndication, but almost a direct investor.
I'm talking direct investment. Now,
and you can accelerate the depreciation. Is that correct?
Oh, yes. Oh, if you want to play games with that, let's play games with that. So effectively, now listen, there's something called a cost segregation study. Okay. So for our listeners out there, the room that you're physically sitting in right now, okay, if you look around the room is made up of multiple things: windows, wiring, flooring, drywall, insulation, studs, brick, like whatever, right? It's made up of these multiple pieces. So cost segregation talks specifically about that. I'm taking one building and I'm segregating it into its pieces, okay? Now, the benefit to that, this is accelerated depreciation. So if I'll talk about, there's a little pitfall here if you're not careful, okay? It's great when you buy the real estate, generally, very general rule of thumb. For every $100,000, you get about $7,700 worth of depreciation, okay? Now, the benefit, so if you're buying $1 million building, well, that's $77,000 worth of depreciation, okay? It's not a ton, it's a good number, okay? It's not a ton, but when you add in leveraging, and that's really where this becomes super powerful. So to buy $1 million building, of course, if you paid for it in cash, you're out $1 million, you only get the depreciation. I mean, you're going to get rents and other things, right? But you only get the depreciation of $7,700. Well, if you're leveraging $1 million building, you might only be out $100,000, and now you're getting a $77,000 write-off. So the numbers become a heck of a lot better when you start to look at what you can do, especially en masse, right? So if you buy 5 properties, 10 properties, when you start looking at more complex properties, apartment complexes versus single family residences, right? Office building, owning vet offices or doctor's offices, the amount of the cost segregation number becomes significantly higher the more complex that a building is, the more bits and pieces and parts to it. Okay. So what triggered for me, and the reason why my brain went to real estate for him, was one, he said he was interested in real estate, like he'd like to invest in real estate. That was a choice of his, right? And two, if the wife becomes a real estate professional, this is why she has to quit her full-time job. She can volunteer, but she can't be paid to do that, right? If she becomes a real estate professional, any losses from depreciation on those properties will offset all of his income. Huge shift, purely and simply because she volunteers instead of working as a W-2. So pretty cool.
And I've heard a lot of couples do that, and I've seen just remarkable. Definitely, if like you mentioned, when you get the license, et cetera, it's just like so easy because you're not really relying on this income, you're relying on the bigger. I'm curious, with the foundation, is there a max where that you can write off? What is that max again?
Yeah, 30% of adjusted gross income, right? So the hard part about this, right, is that if I've done my job well, in this case, right, your adjusted gross income went from 20 million, and 30% of 20 million is 6 million, right? So if I've done my job well, your gross income or adjusted gross went from 20 million to 10 million. So now we can only do 3 million, right? So everything works together and combined. And that's a part of the reason why it drives me nuts when I hear clients, marketing guys, let's go with marketing guys, right? Oh, we got one strategy, it's going to solve all your problems. My favorite one recently is this whole own nothing but control everything. Yeah, me and the IRS have issues with that, but that's okay. We can come back to that. But I really like flexibility, and I like the ability to say this year I'm going to implement these 7 strategies because they make sense for me this year. Next year, I'm going to keep these 3, but I'm also going to do these other 4 or whatever, right? I like the ability to pick and choose what is best for me, in this case for the client, based on what's happening in that year, right? When the boys get older, in speaking to that client, when the boys get older, they want to go live in Italy. Great. So in 7 years, when the boys are older and off to college and you want to move to Italy, it's a completely different strategy. How do we do that? And what does that look like? And how does that get managed, right? It's a completely different thing. So earlier you were talking about how does everything evolve and how does it kind of work together over time and over 3 years, 5 years, 10 years, right? A tax strategy, in my mind, is a living, breathing document. We look at it at a minimum once a year, right? And preferably at least every 3 or 4 months, just to check in. How's it going? Everything good? Okay, do you have questions? Yes. Oh, there's a change? Oh, okay, let's modify it this way. Oh, now you're buying your son a car? Okay, well, before you pay for that out of your own personal pocket, let's see, he's an employee of the company, right? So now we can have a company card. How are we doing that, right? So it's these little tweaks that really tie to the day-to-day life of a person, of a family, that make the biggest difference. Because I'll be very honest with you, I've had so many clients come back and say, Shauna, amazing job, thank you, mind blown, this is great, we're not paying any taxes. What we appreciated the most was that you're actually there to guide and to help and to answer questions, and not just like, yeah, here's your plan, okay, bye, right? Like, it changes everything in life. What's the constant? Change, right? So anyway.
Well, that's why I think it's so fun to unpack this story, and I really appreciate you kind of unpacking this. Now, I want to make sure, because I've heard this, and I know the accelerated depreciation, it's only for a time limit, correct? It's
Correct.
not,
that's
because it's depending upon the taxes. That's why a lot of people are really maximizing that, which I've seen a lot of people really maximize, which is beautiful. So they bought, and that's one of the reasons why you saw a lot of just cash flow in the real estate market. I want to ask regarding the distribution of the business. So he's obviously taking distributions from that,
Mhm.
probably in a K1, I would imagine, and then kind of, taking that. Now I'm curious, could he take less distribution? Because I've seen somewhere they taking less, they reinvest back into it heavily, but maybe he's already maxed out, in infrastructure, team, et cetera, office building, whatever, in his own business.
Yeah, and you're 100% correct, right? In this particular case, I was his last ditch effort, right? He had already done everything else he could do, right? And this is why, going back to the CPA thing of like, yeah, just buy another car. How many cars do you need? I don't need a fleet of 10 cars for me and my wife and my two kids, right? Like I don't need a new car every year, right? It doesn't. So yes, we tend to be, I don't want to say we're always the last ditch effort, but often, people have gone to their CPA and they've done the basic stuff. They've maxed out the 401k or the defined benefit plan. They've bought that new car. They've gave some bonuses to some people, right? And they're still looking at their bottom line going, how much tax am I going to have to pay? Like, because the major downside with a lot of the basic strategies is the money is not your money. It's gone. You gave it a bonus. You bought a car. You put it into a defined benefit plan that you can't touch until you're retired, right? Like it's gone. It's out of your control. And I guess, maybe that's a redhead thing. I like control. Control is good. I like to be able to decide, listen, the real estate market is tanking. I'm going to wait another 6 months or a year and I'm going to go buy 30 properties. Well, if all that money's in my defined benefit plan, yes, there are ways to get out of it, but are there penalties? Are there tax? What do we do now? How do we get out of it? Versus if I use a tax structure, a tax strategy that is already built for access, it's already built for the goals that you want to accomplish. You're not mucking around trying to fix stuff later. It's ready. It's just sitting there waiting for you to go do whatever it is that you want to do. So, yeah.
Okay, that makes sense. Okay, and I appreciate you because I've heard a lot of the basic stuff like you mentioned, the defer, the maxing everything out, and so it's really good to understand. Okay, hey, this is the next level. Once you still maxed out everything, and then obviously come into obviously like yourself, where you're able to get a little bit more creative. And I want to talk now about the future, right? Because not only guys do you help him solve that situation, but now you got to also anticipate, okay, well, you just grew his net worth and his income even more so. So anticipating that next tax bill, second year, fifth year, et cetera, et cetera. So help me understand what else you guys were able to implement in this circumstance that to anticipate that future tax.
Absolutely. And of course, it's always a crystal ball, right? Like this is what we think it's going to look like. This is where we think it's going to go. You do the best you can with planning, right? So generally what I tell clients is, listen, right now, almost the end of the year, I'm going to give you a list of stuff. Your job is when I say jump, you say, how high, ma'am, right? And you go do it, right? Because this is what it's going to do. Just go get it done, right? I promise you, this is what it looks like. Here's your spreadsheet. Here's the back of the calculations. Go get it done. Okay. Generally, the first half of any new, right? So we're about to roll into a new year. The first half of any new year, people, sometimes they know, sometimes they don't know, right? In this case, this particular case, gentleman said, listen, I'm pretty sure that I'm going to be between 20 and 30 million for the next 3 years. And then it's going to die, completely die. Like that's the end of the business. It'll be gone, right? And I'm like, okay, so now I know my timeline, right? I know that for the next 2 or 3 years, this is how much money we have to plan for. So the good bit is once you create a strategy, normally the main bulk of the strategies don't change. You did it this year, you do it next year, you do it the year after that, right? So we kind of have our baseline of here are the 3 years and here's what we're going to do. But that's where you then come into, okay, well, next year, I did that strategy last year. I kind of liked it. I kind of didn't. Let's try something else, right? So again, it kind of goes back to having multiple options, right? So for example, an 831B. So an 831B is a captive insurance company, which I'm sure your listeners have at least heard of. The IRS has 2 different versions, one that the IRS will come hunt you down and throw you in jail, and the other version, which they like, okay? So you have to make sure that you're working with reputable people above board, right? Because you don't want to be on the bad side of any of that ever, okay? But when you work with a good company, well, so let's say, for example, and who knows, crystal ball, right? So right now he's got $20 million of profit. Let's say his numbers blow him out of the water. He's making 60 million next year, not 20 million, right? We planned for 20 million and he's like, oh, I have Puerto Rico again? Like, I thought we were done with this, right? No, there are different versions of an 831B. There's the little version meant for $20 million people. There's the big version meant for $100 million people, right? So there's different versions. It's all the same strategy, right? It's all the same code section, but you start to look at, well, what do we need to do now that you're bigger? When you become Amazon, do we need to open up 2 Irish companies and have the money move between things, right? So you start looking at offshoring, you start looking at different kinds of trusts. With children in his case, and him and I haven't talked about this yet, but on my mind anyway, one of the things we need to look at is, well, what are you going to do for inheritance? Like, what do you want to set your kids up with? Do we need to be looking at QSST trusts or accumulation trusts? How do you feel about 2 boys at 18? Now 14 and 10, but how do you feel about when they're 18? Are you going to give them $5,000 as a down payment on a little tiny condo in somewhere? Like what do you want for your life and for your estate? And going back to, this is why you have to work with the team. I want to talk to your insurance planner. I want to talk to your financial advisor. I want to talk to your attorney. What kind of attorney is it? Is it the corporate attorney? I'll need to talk to them. I'll also want to talk to your trust and estate attorney, right? Because I've got it from the tax angle, but I am not an attorney. I'm not an insurance broker. I'm not these things. You have to have the team around you, because in a lot of this, when you start making that kind of money, this is not a one, it's not a one person can fix. I always love to say, listen, I am a goddess, and yes, I have a magic wand, but it only goes so far, right? Poof, only happens for so many dollars, okay? So it's a team effort. You have to have the team around you, and interviewing that team, making sure that you have the right people on your team, critical, in my opinion.
Well, and I'm glad you're talking a little bit about this, and we're kind of getting into more of that wealth creation, generational wealth, and preservation of that, right? And like you mentioned, just like building a business, you have to build that kind of, structured of a team, right?
Yes.
Someone like yourself and a wealth manager and, obviously attorneys, et cetera. But they all need to be aligned to make sure that, okay, hey, what is my plan? What is that ultimate goal? I want to talk because I personally have a very large life insurance policy, and I have my opinion on this because obviously we've seen some different things, et cetera. And again, I'm young. I don't anticipate that I'm going to die anytime soon. However, though, I do just in case, to preserve that, to offset that a little bit. And I'm curious because I've seen some really creative things. I was studying obviously wealthy families, and I've talked to a lot of individuals, and it's interesting to see how they've all structured something slightly different. Again, it's very contextual. That's why I enjoy this, but this is really about the preservation. So my question, Shauna, really is this, is for those that are listening that are looking at, okay, hey, how do I preserve? How do I build this team out? Right? What should they look at? Because obviously there's going to be some tough conversations as the owner, as the one that's involved. You're the CEO of the company, and this is your COO and your other CEO, you know what I mean? And so that they all work partly. That's the way I like to look at it, think of it. But there are some times where you need to fire that attorney because they may not be buying into the ultimate goal, or there might be a disagreement and disgruntlement. So I want to ask, like, how to make sure you have a synergistic relationship for the team, because that is the baseline of that generational and preserving that wealth that you've created.
Yeah. I've got an easy answer. So I'll give you the short answer and then the long answer. Okay. The short answer, in my opinion, is if you're talking to anyone that needs to be a part of that team and they're telling you one of 2 things, either I can do it all, you don't need a team, or no, we don't really work with anyone else. Right. The face you just made about like the eyebrow, yeah, run away. Okay. Because when you get to that side, nobody can do everything. Nobody can do everything. Not well. Right? Sure, maybe you know all those things, but you can't do them all well. You have to, my opinion, my 2 cents, okay, you have to have a team, right? The other thing that I love about a team, of course, is that you get dual opinions, right? So just because I think one way and the attorney thinks a different way, as professionals on your team, in a 3-way call or whatever, we should be able to have a discussion. Here are the pros from my side, here are the cons, here are the pros from your side and the cons, and what do we think together as a group with you as a client, what do you want to do? Okay. Because I have had that happen more times than once. I come back with a great tax strategy and the client's like, yeah, but I don't like it. Like, I don't want to do it. Whatever reason, I don't want to do it, So collaboration is huge for me. So if you ever are interviewing, as you're interviewing, should be interviewing people on your team, if they don't bring up collaboration, for me, that's a kind of a flag. Right? Like, you can ask them about it, but once you ask them about it, of course we're going to work with the people. for people that collaboration is important, I feel like it comes out in the discussion anyway, right? Because, well, what did I just do, right? I think it's important that we talk to this person, this person, this person, this person, right? So anyway, you get the drift. Collaboration is my short answer, okay? The long answer. There are a million attorneys with a million strategies. And I would say there's a million attorneys with 2 million strategies, right? Everybody's got multiple ways to do everything with everything, okay? Interviewing, which is long and drawn out, and you end up talking to 15 people and your head will be spinning, okay? Take notes, interview, have multiple people with you on the interview. If it's you and your wife running the whole show, your wife better be in those meetings, okay? If it's you and your CFO and your CEO, all 3 of you better be in those meetings, right? You want multiple opinions, you want multiple notes. It is a pain. I'm not going to tell you it isn't, okay? It's a pain. But the reason why you want multiple people listening with very good notes is so that you can compare notes between yourselves, but also between this attorney versus that attorney. And okay, well, this one we're knocking out. It's almost kind of like you're playing, what's it called? The card game War when you're a kid. This king was better than the queen, and like, right? You're literally, you're kind of interviewing, knocking people off, and you're comparing this attorney versus that attorney. Second point, you don't have to use one attorney, and I'm using attorney, but it could be insurance person or advisor or whatever, like fill in the role. You don't have to use one. You can hire 2 and have them talk it out, right? And then you can sit there and listen to the arguments, right? I've done that before, where I've actually seen a client hire me as a tax strategist, another tax strategist, and 2 CPAs, because reducing his taxes was that important for him. He put all 4 of us in a room and said, figure it out and come back to me. And we did. And it was great, right? But we also all worked well together. Nobody was saying, oh, I'm smarter than you. So I'd love to say that this was an easy, my magic wand, here's your team, right? I've got referrals, but you may not like them. Interviewing will probably be the hardest part of this process. Last point, always keep your ears open. Sometimes, and I don't see it that often, but sometimes what happens is you hire an attorney, they do an amazing job for the first year, and then they just kind of put you on a shelf. Because they're like, yeah, I built the plan, it's good. They don't look at it. How often are they coming back to you saying, hey, can we re-review? Can we look at this, every year, every 6 months? Like, how often can we look at what you're doing? Just make sure that we're not veering off path, right? You didn't decide to do something and I didn't know about it. Now that's going to change the plan. So those are all my pieces of advice. So.
This is incredible. Yeah. And again, I think it's so important for a lot of these individuals to listen and hear this, because there's so much that goes into it. And I did not anticipate it. And of course, I've talked to a lot of people and they were kind of explaining to me a little bit, oh, I didn't know, like, these are the questions you should be having. These are the conversations you should be having. These are the people that you should have in your ecosystem, but also making sure that they are all aligned with what you desire a little bit. And, obviously being aware of that, because if there's no synergy, then it's like, okay, something's going on. And at the end of the day, that's your bottom line. Because I was actually reading something, a friend of mine told me about this, which I was not aware of. Rockefeller, which is a very wealthy individual, 70% of that inheritance was taxed because he didn't have the right infrastructure established. And I thought, oh my gosh. And of course, I didn't think about that. I mean, that's still a ton of ass money, but the reality was it's like,
well,
70%.
A ton minus 50%, is still a ton, but yeah, it's not as much as it would have been. Yeah, and sorry, now you're going to get my blood boiling. Did you just see me flush? I'm like, now you're going to get my blood boiling. That right now, right? And when in the last election, the government was talking about, okay, the estate exemption. At the moment, I think it's going up next year to like 12.9 or something like that, right, per person. So if you're married, it's a little under 25 million or a little over 25 million. Okay, so great, fine. Okay, what kills me, absolutely kills me, okay, I've got clients that are sitting on 60, 70, whatever million of assets, right? Well, yeah, I'll figure it out later. I'll get to it later. I'll work on it. Nobody wants to face their mortality. I don't know how to say it nicer than that. No one wants to face their mortality. Unfortunately, unless you're a vampire or you found some magic pill, which if you could share it with the rest of us, I'm sure would be many people very happy. It's going to happen, right? So it drives me nuts, but it's not my world, right? It's your choice. If you want to sit on 70 million and then anything above that 25 million gets taxed 25% or 50% to the government, it's your choice, it's your money. And so we do ask on our end, we ask a legacy question, which is, listen, what do you want to do with your money, right? Because some people, it's always one of my favorite answers. When we talk about what do you want to do with your money, and for example, with your kids, okay? One answer is, listen, I earned it, I'm spending it. I'm sliding into the grave with zero, right? I'm going to give them a head start. They can have a first car and like a down payment on a condo, but like, right, I built it, I'm spending it, I'm out, okay? Then you get the other side of that scale, which is I don't spend a lot on myself. I am building an empire, an actual, like they use the term empire, meaning like the Roman Empire when they're talking, right? And it's a very different, that comes back to a very different planning model, right? Because if the plan is to build an empire, we're looking at 5, 10, 20, 30 year, 50 year, 100-year timeframes, right? In which case we start looking, like you mentioned, insurance. There are certain types of insurance policies that are generational, multiple generational. There are certain kinds of trusts where if you're going to sell a business for $50 million, great. You and your children and your children's children and the children's children will never pay tax on that unless you take money out. Great. There are ways to do that kind of stuff, but it completely depends on what you want as a person, right? If you want to slide in the grave at zero, tell me how I can help you write off that yacht. Let's make that work. Let's go, right? We're going to get you a current year tax deduction on buying that $1.3 million yacht, which has so far been one of my favorite things to help a client purchase, but which we've done. So anyway, honey, I've seen everything. I've seen everything. I've got one client trying to buy an island right now, and he wants to write off the island. I'm like, VRBO, let's go. I'm in. So anyway, side tangent. But yeah, so it really, really, when we talk about generational, well, what do you want? Maybe you want a bunch of your money to go charity. I mean, I've seen people that thought they started building an empire, right? They get older. Now they're at 75, they're at 80, you know, they're still in okay health, not amazing health, but you know, 80, right? Like you're doing okay, right? And they look at their children and they go, you know what? I didn't raise you right. Sorry, right? And they, you know, they get something. Here's $1 million, whatever, go away. But the big bulk, they start changing their mind. They want more to go to charity. They want to set up a dog kennel for the lost puppies, you know, like whatever, right? So part of estate planning, because I've seen this as well, when you start looking at generational and estate and trust and this kind of thing, one of the downsides, many people get locked into something because they think that's what they think they're always going to think. And that was a lot of things, but do you follow what I'm saying? Like they have a plan in their head and they think that's really what it's going to be. And so they get locked into something. What did I say? I like flexibility. I like options, right? I would rather leave yourself some openings, because I've had, and I'm getting goosebumps even talking about it. I've had a couple of cases where, you know, big families, big money, you know, $300, $400 million worth of assets, right? They gave everything to the kids, everything, because the kids were the life and that's what they were going to do. And the kids talked about building empires and it was going to be this big empire. Yeah, the kids blew it all of it, gone. And the parents who had built the whole thing ended up living in like a 1,200 square foot condo that they had to rent because their kids wouldn't give them any money. I've got serious issues with things like that, right? But anyway, that's me. Like I said, redhead, I think I like control just a little bit. Anyway, yeah, it's tough because you don't want to give it to the government, but if you get locked into things, anyway, you might be giving it away to somebody that didn't deserve it or get it or whatever anyway. So I don't know. It's very hard. You just have to kind of be balanced, I think.
No, this makes perfect sense, Shauna, and I love your tenacity, and I love just the energy that you're saying there. But also, I love what you're saying, where you know, having these conversations, right? Really asking these certain questions, because obviously, when you are at that stage, it was interesting because my dad, you know, he's got some wealth, but not like, you know, 100 million, et cetera. However, though, we started having those conversations, and, you know, he decided to do a preservation trust. And so we put it in there, and cool, wonderful. And that fit for him contextually. And that's why I think it's so important to have these conversations, because when you are dealing with, you know, mid 8-figure, 9-figure, even maybe, you know, $1 billion, you know, AUM, it's like, okay, well, you got to have these conversation dialogue, because it's like, you got to visualize that's a lot of capital, a lot of money, and you got to move that somewhere. And so I just appreciate you being on here for, and first of all, taking the forefront and, having these conversations with your clients, with their families, with their team, so that you can have that synergy and really help them move the needle further wherever they're desiring. And like you mentioned, just building a plan around what they desire at the end of the day, I think that's just an awesome approach, and unpacking some really higher level stuff. So this is a lot of fun stuff. Shauna, I really appreciate you being on here. I love to ask my audience, or ask my guest, how can they reach out to you, be part of what you got going on? If they have more questions, you have tons of resources out there. How do they do that?
I was going to say the easiest way to find me, I'm one of Redhead's, pretty easy to find, but just look for taxgoddess.com. So taxgoddess.com. We do have a team, so you can book with me, with the team. We go look at all the things, and yeah, that's where we start a relationship, a little tax love, all the good bits. So.
Awesome, guys. Those links will be in the description below. So make sure you stop what you're doing and make sure you go to taxgoddess.com. That link will be in the description. I'll also put her LinkedIn account as well down there, so you guys can communicate, engage with her, and follow her on that stuff. And again, Shauna, I love just the immense conversation we had today. I know we could vibe and riff on this quite a bit, but let me ask you, before I let you go fully, is there any last words of wisdom that you'd like to share with our audience?
The one coming instantly to mind, just because of the conversation, is hope is not a strategy. Really, really. My very first business coach ever said that to me, and it has stuck with me to this day, right? Hope is not a strategy. If you are hoping that the tax rates will go down, they will not. My friend, hope is not a strategy. Make a strategy.
Such immense wisdom there. That is the top 1% of tax strategists in the US. My friend, the CEO and founder of Tax Goddess Business, Shauna, the Tax Goddess. Guys, that is Journey with Christian D. Evans podcast. Until next time, be uncommon if you can. Yo, this is Christian D. Evans, Journey with Christian D. Evans podcast. We thank you so much for listening to this amazing episode. If you feel and you know that this was valuable to you, please show some love to our amazing guest by liking this, by commenting on this, by making sure that you do a nice 5-star review, and just show some love to our guest. That'd be really awesome. Also, make sure you share this with a friend, a family, a colleague, someone that you believe would bring value to their life right now. And guys, we just want to say thank you again for just being part of our community. If you want to have more resources, don't be afraid. Go to christiandeevans.com. You can actually schedule a phone call with me, or you can send me an email at christian.evans@beUncommonIfYouCan.com. That's christian.evans@beUncommonIfYouCan.com. Always love to hear some feedback, and let me know what is the number 1 or 2 things that you are struggling in your business and your life, and we'll make sure we have those conversations. Guys, that is Journey with Christian D. Evans podcast, and until next time, remember, be uncommon if you can. Cheers.